Hello and welcome to the Bankers webinar, announcing the winners of the Transaction Banking Awards 2020. I'm Joy Macknight, Managing Editor of The Banker. In addition to celebrating the leaders in transaction banking, I'm pleased to have several industry experts joining me via video link to discuss trends in the transaction banking industry. So first, I'd like to invite my panelists to introduce themselves.
Hi, Joy. Thank you for having me. Francesco Burelli. I'm a partner at Arkwright Consulting, where I specialize in payments, transaction banking, and digital business models.
Hello, everyone. My name is Eric Lee. I look after banking research for Coalition Development, which includes cash management, trade finance, and security services. Coalition is a market-leading business intelligence provider for the corporate and investment banking industry.
Hello, Joy. Ronan O'Kelly. I'm the global head of corporate and transaction banking at Oliver Wyman, a global management consulting firm.
My name is Mark Smith. I head up the Treasury and Trade Solutions business for the EMEA region at Citi.
So going back to basics, the role of transaction banks is to underpin the world's trade and commerce, oiling the wheels of the global economy. And it's this role in supporting business through payments, liquidity and cash management, supply chain finance, and trade finance that really comes to the fore in a crisis like COVID-19. Even during the global financial crisis of 2007-2009, a crisis originating in the financial sector, it was the transaction banking side of the business that provided the stability and the continuity needed to get the world back on track and into recovery mode. And while transaction banking may not move as quickly as retail banking when it comes to digitization, the transformation has certainly begun and innovation is beginning to pick up pace. Impressively, many of the submissions for this year's awards included new products and services aimed at responding to evolving corporate and FI client needs during the global pandemic. So before we get around to the first set of category winners, let's start by exploring the trends our panelists are seeing in the industry.
Whilst it feels a long time ago now, pre-pandemic trend was sort of one of, I guess, moderate top-line growth within the transaction banking industry. But I think underneath that, you had seen some quite significant acceleration of change by clients and the market overall. So if I just elaborate on those two or three different themes, I think that which were changing pretty substantially. Clearly, going into the pandemic, you still had a lot of the concerns still around the geopolitical space, trade wars, and the shifting global supply chains and commerce as a result. So that was one of the themes. I'm sure we will touch upon it later in this, but another theme was around digital disruption, really reshaping industry ecosystems. And that was supported very much by sort of rapid advances still in technology, changes in financial services overall. A good example of that as well is the instant payment landscape that was accelerating very quickly as we went into the pandemic. You had tax changes, the third one, and the BEPS reforms really rippling through corporate business models. And then you also had, with the faster growing emerging markets, those were continuing to be a pretty significant driver of corporate revenue growth. So that's the fourth thing that I could say, pre-pandemic were very much out there driving a lot of change within the transaction services space. So whilst a lot of change has changed in the last 9 months or so, as COVID-19 had its impact, there were still a lot of pretty significant shifts in commerce and banking ahead of that. And some of those themes very much almost accelerating as we went into the pandemic.
And Eric, from your perspective, what were you seeing as the major trends in the industry?
There were a few hiccups leading up to the pandemic. So in 2004, 2005, we saw the China GDP decoupling. That was one of the major hiccups for the industry. But besides that, the industry has actually enjoyed uninterrupted growth for the past decades or so. So that is why I think that there has been a lot of enthusiasm built around this industry, as well as how the industry is actually help the global economy to facilitate even further. I think that one of the things that, from my perspective, is a lot of the things was happening underpin all the business strategies we've seen around this industry is globalization. I think that was the key words for the past 10 decades, and the people has actually been able to bring it further and actually bring it as a benefit to all of us as a consumer as well. So obviously that thing has changed a little bit since the start of the trade war. Now the pandemic has actually changed the supply chain finance strategy a little bit further down the road. So we are yet to see what is actually the impact for the industry, as well as how the industry is going to respond to that.
Okay, so let's fast forward now into the past 6 months and how the COVID-19 pandemic, the global lockdowns that have happened since then, how that's really impacted the transaction banking environment. Ronan, what is your take on that?
I think it's pretty clear the pandemic has presented a pretty acute challenge to the industry overall. So net interest income has collapsed across the industry as central banks have cut policy rates to negative or near zero. So we saw in the first half, global's transaction banking revenues down around 8% on the first half of 2019, despite deposit volumes at elevated levels. So economically, it's had a pretty material impact on the business and leads to some fundamental challenges as to how to balance some of the things that Mark was talking about that existed pre-COVID. So how to balance near-term economics of the business with investing for the future and investing in digital transformation. We've also seen a pretty radical change in terms of how corporates are interacting with their banks. So their needs have certainly changed, but we've seen a radical shift to digital channels, an adoption of digital channels that already existed, but perhaps weren't fully used. An increased focus on real-time liquidity. It's a topic that many have talked about for many years, but in an era of abundant liquidity pre-crisis, that hasn't been quite so critical for many corporate treasurers. And I think at the lower end of the market, questions about the end of cash. Right? Is this a trigger that moves people towards digital currencies and the end of physical cash?
And Francesco, do you have any remarks in terms of that? Move to digital, away from cash. What are you seeing?
To take it to a level deeper, now we have a situation where trade is behaving with a K-shaped trend. There are some parts of the industry that are doing pretty well, like anything related to health, for example, while other industries are, for the time being, under ice or going down the drain or facing different type of challenges. Now, in this type of context, supply chains have been completely disrupted. We have clogs in ports, the volumes of availability of air travel diminish. We have a resurgence of rail transport and so on. So this is becoming a very patchy type of landscape where the common trend from corporation is the need of improving their workflow and their working capital management. In this, we have also the remote working, and that has taken the demand for digital solution, digital touch points up to the roof, where banks had to adapt very, very quickly to being able to let clients operate from a distributed environment logistically. That is creating different type of challenges in terms of access to applications that could have been installed centrally within the perimeter of a corporate, as well as different type of security challenges in terms of managing authentication, replacing operations that were to a degree still dependent on paper that is sitting somewhere in the office that nobody can access. Then on top of this, we have to say that the pandemic is creating a lot of significant pressure in terms of finances, both at individual as well as business levels. We have corporations that still have to uphold expected quarterly result, the value of shares, and so on. And all of this is creating within the current environment a resurgence of risks that we haven't seen to the same level of magnitude for a long time, related to behaviors that can be debated or can be, not considered to be 100% accounting correct in accounting perspective. So all of a sudden, the landscape has a completely different set of layers of complexity.
Okay, so both yourself and Ronan talked a little bit about some of the challenges that financial institution and corporates are facing. How best can their banking partners really respond to their needs? What is top of the list, Mark?
To quote one of the large CEOs of a tech firm, I think in the quarterly announcements that they had, they expressed that you've almost had 2 years of digital adoption within the space of 2 months. So that's really enabled an acceleration of the embracing of a number of digital connectivity that our clients have. And certainly from our city perspective, as one can imagine, very focused on using that as an accelerator for adoption of clients. And it's that resilience, it's that operational resilience capability that through digital forms that you can really build and grow that and make it a lot sounder. So for instance, our digital account onboarding capability accelerated pretty substantially, and we've got now well over 50% of all of our accounts in the EMEA region purely opened on digital rails. So gone are those days of wet signatures, gone are those days of paper going backwards and forwards. And obviously that's not only a digital embracing, but also just the very logistics of paper, of postal, all of those things that were in people's minds, but that again, this pandemic has really accelerated that. So banking partners absolutely helping with that adoption to enable our corporate treasurers to be a lot more efficient in that. Then I'd also sort of touch upon one of the areas that I feel as though our client base has been focused on at the early stages of the crisis was again about their response, their marshalling their corporate liquidity, restoring balance sheet, looking at the cash flows through the new lens of the earnings that they feel as though they've got at least some predictability to. So again, looking at those cash flows, managing that risk, managing the controls, particularly when you look at what was happening in the market with pretty substantial change in FX rates, changing interest rates as well. Corporate treasurers most definitely need to be on top of that. Then I would say one thing that we've been working with clients about is almost using this crisis to create a lot of disruption, creative disruption within their organization. And there's that using this as a catalyst to innovate, redeploy capital towards different growth opportunities. And certainly when we look at our client base, more and more movement, I would say, towards that C2B space, so consumer direct buying. That's a trend that we've seen, and we as Citi very much helping our clients in that collection space and that visibility, and that becomes very much a different volume play from the number of payments, the number of collections versus the traditional B2B route. So a number of areas that we're really trying to help clients, and very much we've seen that client embracing in a number of the different themes that have come up from the panel partners.
And Ronan, what would you say in terms of what are you seeing across the market in terms of the banking partners really responding to what the financial institution and corporates need?
As Mark said, I think it comes down to fundamental corporate and FI needs. And at the apex of the crisis, it was really about access to liquidity, certainty of liquidity, and visibility of liquidity. And that's both in terms of optimizing cash balances around the globe. So again, that's always been a trend, but it became much more acute as a priority, as well as access to financing on the lending side. And what we saw in the early days is pretty rapid drawdowns on revolving credit facilities and other financing instruments that were then often placed back on deposit with the same institutions. Whilst some of that has subsided, and I think what we've seen is that there is greater comfort with how the pandemic is going to evolve for individual corporates, so they've got better understanding of the cash runway they need. That need for certainty of liquidity and the ability to visualize and understand their liquidity needs, particularly if we see the pandemic evolving in uncertain ways around the globe, perhaps second lockdowns in different markets. What we'll see is an increased need to have visibility of that liquidity. A second theme that we've seen coming through is around supply chains. So again, supply chain visibility and integrity, as we've seen different lockdown patterns affect suppliers, the need to extend financing to those suppliers via supply chain finance programs, the need to see and understand distress through the supply chain and potentially substitute for alternative suppliers have become important themes for corporates managing through the crisis.
And Eric, do you have anything to add?
Sure. So I think my fellow panelists talked a lot about the corporate behavior. They want a little bit more financing and liquidity needs and their supply chain sort of strategy because of the pandemic. What I actually want to say is actually different client segment industry has so different needs and what they want nowadays. I think we probably all know that what nowadays British Airways as a corporate, their needs is fundamentally different from Amazon. And what Central Bank of Nigeria needs is very different from British government. So if I just say that at the coalition, we are a market observer, what we see that the banking partner has been instrumental of assisting their client to go through this pandemic crisis. If I put corporate aside, looking at the segments that we have not talked about yet, first of all, what's happened to the FI? If you think about the market volatility since the end of the middle of March and all the craziness that we witnessed in the emerging market, the financial institutional clients definitely need one thing, access. They need access to a lot of things. They need access to sort of the market depth. They need access to the sort of dollar. They need access to a lot of things. And the banking partner in this sense actually can help a lot to bring the sort of, to make sure that the financial system of a country, of a big financial institution, be it a bank or asset manager, is actually can survive. The second other client segment is the government or public sector. I think we all heard a lot about the US CARES Act, the PPP program. In the UK, we have the small enterprise bounce back loans. How do these things happen? You need a banking partner actually deliver all these solutions to the small corporate, to the American workers, or to the British workers, or workers in every single other country. I think this is another thing that the banking partner has been the unsung hero in this case. We all heard about the grand gestures coming from all the government, but it is those banks that you have a relationship with who deliver all of these financial support to you. And this is the things that people don't talk about in this industry at the moment.
So thank you so much for your industry insights. Now let's announce the category winners. In the cash management category, the winner is CIMB. It's very difficult to take on the big entrenched players, but this year CIMB made such a huge leap forward that it should be rewarded. The Malaysian bank ramped up its offerings in its home markets, including launching BizChannel at CIMB mobile banking app, virtual accounts with APIs for real-time cash flow management, and foreign exchange contract rate online booking. In the payments category, the winner is Citi. Citi has really stepped up its game in payments this year with the launch of Citi Payments Insights for digital tracking and self-service capabilities. It also launched Spring by Citi, its digital consumer payments business, which supports the changes in merchants' business models by offering the ability to collect from a wide range of bank and non-bank payment channels. It broke new ground with the launch of cross-border instant payments. In the securities services category, the winner is HSBC. HSBC tipped the scales in its favor with the launch of Digital Vault, a custody blockchain platform to digitize the transaction records of private placements, which will allow access to these records quickly and efficiently. It has also made investments into its middle office capability, including trade management and settlement control, increased instrument coverage and OTC derivatives processing, and improved investment book of record reporting capability.
Hello, I'm Allegra Berman, Head of Institutional Sales and Co-Head of Security Services at HSBC. I'm delighted to accept the Banker Award for Best Bank for Security Services, and on behalf of my co-head, Richard Godfrey, and the entire team at HSBC, thank you. This means so very much to all of us. 2020 has been an incredibly challenging year, and Richard and I have been amazed by the sheer resilience and adaptability of our clients, our colleagues, and the industry as a whole as we have tried to navigate through these uncharted waters together. Our clients need great connectivity, rapid and reliable access to comprehensive information, and more choice over how they experience and consume data. Our investments in digital and data have targeted these areas, bringing a number of exciting solutions to market over the past year. Our strategy of continuous technology-led transformation means our clients can expect to see a stream of exciting new developments over the coming year. Thank you to The Banker for recognising the commitments and achievements of our passionate, talented and dynamic team at HSBC. And thank you to our clients who continue to partner with us on innovative solutions which are helping to drive our industry forward.
In the supply chain finance category, the winner is UniCredit. UniCredit has expanded its reach and integration through a new supply chain finance digital platform in partnership with Taulia. It has also supported its clients with dynamic discounting through its partner FinDynamic. And it has also adopted existing solutions, allowing the Italian bank to respond quickly to clients' needs during the COVID-19 pandemic. In the trade finance category, the winner is Standard Chartered. Standard Chartered strives to be an innovator in trade finance. Earlier this year, it completed the first renminbi-denominated international letter of credit over blockchain. It is also the first financial institution to partner with TradeLens, an open and neutral blockchain-based platform, which is a joint venture between IBM and Maersk shipping lines. While the transaction banking arena has been slower to change and adopt to new technologies, compared to retail banking, for example, today it's undergoing modernization, focusing on where it can deliver true value to corporate and financial institution clients. And it's clear that banks are driving digitization across the regional and global footprints, and that the COVID-19 pandemic has accelerated this drive. So my first question for this part of the webinar is, how are the investments that the banks have made in their digital transformation journeys making an impact in the transaction banking space? Francesco, I was going to address this question to you first.
So I would distinguish two layers here, a tactical layer and a strategic layer. A tactical layer, as we discussed already, there is a great need of visibility for liquidity positions, for the ability to work remotely, eliminating paper from the process, and so on. And this is where some of the investment in digital that has been undertaken so far is starting paying dividends. On the other side, from a strategic perspective, we have moved from an environment where corporations were thinking of a just-in-time type of perspective into a just-in-case type of planning. And in here, we have a number of different directions that the corporate treasury needs and requirements are going to evolve into. First of all, there's going to be more need to understand better how the supply chain and is going to evolve. And for example, in finding alternative sources of liquidity, alternative clients, having support in what we are going to see or expecting to see as a regionalization of some of the supply chains that have been trending toward global integration up to now, but there's been a reverse because of the geopolitical risk. And now, given the painful experience of the COVID and the lockdowns, we are going to see a bit more of that. So on the side of the strategic level, there's going to be further integration, much more advisory coming up in terms of integration within corporate, in terms of the overlay framework and organization of the supply chain itself. Now, in here, we got some common technology teams that are being valid before the COVID experience and are valid now at present. So first of all, the centrality of APIs in terms of enabling the lowering down of barriers between silos in terms of information access as well as execution within organization and across organization. We have significant investment coming up in blockchain technology. Transaction banking and supply chain is an area where blockchain is proving to be the most conductive and the most promising area of application ever. And here we have a number of different solutions that are coming out of the proof of concept pilot into industrial production. And then finally, we have the not yet fully exploited capabilities of artificial intelligence and advanced analytics that are going to be very much key in letting corporate optimize their liquidity position and improving their cash flow, picking up trends that may not even be obvious at the oversight, but by pulling together information data and data pools from different perspectives, from transaction, supply chain insight, industry, and so on, banks would have the ability to add a lot of value to treasuries in the way they plan their operations and their decisions.
And Ronan, do you think that the digital transformation that the banks have made, do you think it's, where is it making the biggest impact in transaction banking? How far has it really gone?
There's a lot of work going on across the industry. Some of the largest transaction banks have spent north of $1 billion over the past few years in terms of digital transformation and technology transformation. But has all of that resulted in demonstrable impact either for clients or for the bottom line yet? I think the answer is it's mixed. Some of it has, some of it hasn't. A recent survey we did of banking investors suggested that digital transformation is not widely valued by the investor community at the moment because they can't really see the results and there isn't sufficient transparency on it. So whilst there are certainly some game-changing investments happening today, Francesco mentioned the transformative power of blockchain as well as artificial intelligence. I think I'd argue that some of that hasn't yet fully come through in terms of impact yet. It has great potential, but has it impacted the industry or customer benefits yet? Perhaps not. Really where we see most of the nearer term impacts happening are on perhaps more basic things like improving digital channels and the ways in which corporates and FIs interact with their banks, both to initiate transactions, to onboard and initiate relationships, and to manage reporting. We're seeing a lot of focus and impact on digitization of core processes like onboarding, basic things like document management and credit processes. And underpinning all of this is a fundamental transformation in the underlying technology fabric of transaction banks. This is the unglamorous but fundamental part of the transformation that sees a transition to an API-enabled technology fabric, one that's more cloud-based, and one that's much more modular and enables transaction banks to partner with third parties and to embed new digital technologies much faster.
Excellent. And Mark, would you agree with Ronan's assessment?
As Ronan just sort of walked through some of those points, I was sort of nodding my head in agreement, because in many cases, certainly our corporates, they're all people and they all have that sort of retail consumer experience with many of the banks that they will bank at from that personal perspective. And then it's a case of when they move into their corporate life, their work life, how that same experience can filter through as well. So, as was pointed out, certainly from a Citi perspective, we've been very focused on that client experience. And that client experience is quite broad. It's the key points that have just been referenced, right? How quickly can you open an account? The documentations that I have, is it long? Is it drawn out? Is it too much there to absorb? Are there lots of repeated phrases? Are there a lot of repeated terms in all of the different legal documents? As Citi, as a very global bank, we've also been looking down at the country levels to see, right, even at the country levels, do we repeat same legal terms? So as was pointed out, I think that's almost the guts and the foundation of a lot of the digital transformation that we're going through, because that acts as an important foundation for incremental things on top of that. And I'm pleased with progress made. As I mentioned a bit earlier, now well over 50% of all of our accounts opened up in EMEA are on these digital rails. Now, all of that said, that doesn't stop further progression in the innovation space. APIs was mentioned. We've almost had an exponential growth of the use of APIs within our franchise over the last 12 months or so, and I see that continuing. That focus on digital advisory, we've talked about connectivity with banks in that advisory space. We're doing more and more digital advisory conversations with our clients, talking about best practice, talking about the embracing of many of these digital means. And for Citi, we sort of celebrated a few months ago 10 years of our TTS, of our Treasury and Trade Solution Innovation Lab, that is very much working in partnership with our clients, in partnership in some cases with fintechs, to really solve some of those meaty client problems that are out there, those meaty banking problems that are out there, and using technology, using innovation to sort of really leapfrog and improve the experience dramatically. So I'd absolutely agree with some of those themes. And for us, circular around that client experience, how can we improve it?
We're seeing a great increase in demand about improving the user interface and the customer experience. So even before COVID and the lockdown, there's been a growing demand to consolidate information and the ability to execute decision on single interfaces, despite that the information or the execution could have been actually concerning different banks. So there is a demand for a single, practically aggregation portal to where to include and from where to control a sort of corporate dashboard of liquidity, cash management, lending decision, and so on. Now, given the fact that with COVID, we had remote working growing at becoming the absolute operating mode for a lot of treasuries these days, we had a logistical shift out of an office with an environment with high connectivity, big screens, multiple desks, multiple workstations, and so on, all located in close proximity within the same environment, to a very virtual space where screens are smaller, there's less of them, interaction is virtual, potentially bandwidth could be a bit of an issue, and so on. And all of this is taking us back to a challenge that is mostly considered to be a retail challenge, but in reality is very much something that the corporate industry have seen when there's been the first wave of tablets being rolled out, being adopted globally, and the expectation of corporate treasurers and employees of corporates have shifted from being dependent on a desktop, to a question of why can't I access my liquidity position or authorize a payment out of my tablet when I'm out of the office. Now, this question is not just coming back, but it's coming back with a vengeance, because ultimately it is what we can do over a limited interface in terms of access to data, verifying ourselves, authorizing a signature, and so on, that is enabling Treasury to work on. So in the tacticality of some of these building blocks, we are back to the basic question around how interfaces are interacting, providing an interaction with users, and now these are exchanging information within the organizational challenge of a distributed environment that is now very virtual.
Eric, I was going to bring you in and really ask you about where you're seeing sort of the most innovation. And I was going to tack on another question, which is in retail, you've seen a lot of fintechs coming in and things. Is this happening in the transaction banking space as well?
What I actually want to talk about to address your question is, when we talk about innovation, don't forget about banks is not just a fintech. Banks is actually providing a service to their clients. So as a result of that, we actually see some innovation around the product side as well. So as someone really famous once said, never waste a good crisis. So when we're looking at the product innovation, it's usually coming to three, actually the most emerging thing that we've seen. First of all is there's lots of talks around supply chain strategy network is changing. That definitely means that the banks, the supply chain finance will change to cater to this trend as well. So in coupled with the accounting, the regulatory, that sort of pressure we've seen in the industry, we definitely think that the banks, the banking community, their view towards supply chain finance, the product is changing as well. So I'm not going to be surprised to see that these products probably going to have a slightly different form in the next years or so when we actually have this pandemic behind us. The second area we see is everybody has anticipated interest rate is going to stay low for a very, very long time. That always means that your liquidity product structure will change as well. Otherwise, your product is not going to be fit for purpose anymore. So as a result of that, we see some innovation around the liquidity products as well, which is again, which was not very widely observed before the pandemic. And thirdly, I think is how actually we put the money where we actually talk about is ESG. I think there has been so much talks about ESG in the past many years. I think this is the first time we actually seen a lot of banks. We're talking about the tier one banks, the world's biggest banks, is actually do something about it. We see a lot of banks putting ESG score as part of the criteria they're offering products to their clients. We see many banks actually offering some sort of green initiative linked products in the typing. I think that to summarize, I think this pandemic does put a lot of emphasis and urgency for the digital sort of innovation, but at the same time, I think this pandemic will bring a lot of sparkling new idea coming out of the product services side as well.
The environmental social governance topic is so hot at the moment, and I think there's been some, especially through this crisis, the social aspect of it is really gaining a lot of attention. Ronan, where are you seeing sort of innovation?
One angle that we're seeing is the role of customer-led innovation across all the products, across payments, liquidity, trade finance, supply chain finance. Mark talked a little bit about what the City Innovation Lab is doing. We're seeing many institutions becoming much more focused in terms of how they identify specific pain points for individual customers, which are very different sector by sector and even customer by customer, to understand both in their corporate treasuries, but also in their broader businesses, right? How they grow their business, how they manage their supply chain, how they manage their procurement, to how transaction banks can help them solve those problems. And I think some of the richest innovation stories that we saw coming through the Transaction Banking Awards this year was around very specific, industry-specific customer innovation, whether it's about the deployment of instant payments to enable faster insurance claim settlement in the insurance industry, whether it's about the use of embedded payments within autonomous vehicles in the automotive industry. There are many examples, and I think that's where we're seeing some of the richest innovation happening and where that innovation is driving the greatest impact.
If I could just to expand on that point, because it's a great point, and if you think about that, it's impacting the client's client. So how can you make that experience so much better? So the insurance dispersion, you are in turn helping that insurance company improve the experience for their clients at the end of the day. So I think that client experience goes one level deeper, because that's the true differentiator for many of the banking clients. I
think we are absolutely seeing more collaboration with fintechs. I think in the early days of digital disruption, fintechs were seen as foes and potential challengers to the banks. I think we've now entered a much more mature collaboration model with fintechs. And for many reasons, both access to customers, access to funding and sheer scale, fintechs are finding it a much more productive model to collaborate with the banks and provide individual components of technology or product offering that enriches the bank's proposition. We've seen a number of the banks take equity stakes in some of those fintechs to help accelerate some of that growth and deepen the partnership. And as banks move to a much more modular product and technology architecture that is, as we said earlier, API enabled, the ability to plug into an individual best of breed fintech is much easier. It's also much easier to plug out from them. And when a newer, more innovative fintech comes along in a few years' time, to partner with the best in the market. So I think it leads to a much richer innovation environment and hopefully much better outcomes for customers as well.
We have two particular drivers for an increase activity from the fintech side within the transaction banking space. So first of all, initially, if we look at historically where fintech ended up focusing their activity, there was a lot of focus on the retail side of business. Now, that is not disappearing completely, but is shifting. So we see way more investment in both in terms of capital as well as initiatives into the corporate banking space, transaction banking, into the RegTech business, that it is an enabler ultimately to big parts of the operations of transaction banking and InsurTech, first of all. So there's more supply on one side. On the demand side, on the banking side, we are way ahead on a learning curve, because as initially banks were looking at fintechs as a potential new entrants, attackers, enemies, and so on, we are a few years down the line where we have learned how to collaborate with them. So there is way more familiarity with ways of interaction with the innovation ecosystem, in the way of leveraging hackathon, direct investments, price competitions, and so on, how to involve and integrate with other stakeholders within the innovation ecosystem. And the two factors joined together are going to let us think that we're going to see not just more activity and more interaction coming up from the fintech side, but also that is going to be more meaningful in terms of bringing benefit to the industry and to clients alike.
Great, thank you so much for your insights again. And now we're going to celebrate the pioneers in transaction banking from across the globe and regions. And the winner for Africa is Crown Agents Bank. Over the past year, Crown Agents Bank has stepped up its game, and its digital transformation is beginning to reap rewards. Part of this transformation is its acquisition of FinTech Segovia's enterprise business and payment gateway product. It also rolled out its mass payment solution to make high-volume payments into the emerging markets easier, faster, and cheaper. Finally, it launched a mobile app for its automated currency trading platform, Empower FX.
Hi, I'm Albert Mellison. I'm Group CEO of Crown Agents Bank. We're delighted to be awarded the Banker Magazine Transaction Banking Award for Africa. And really on behalf of all of our staff at both Crown Agents Bank and our sister technology company, Segovia Technology Inc., I think it's a real testament to the real transformation, digital transformation that's taken place in our organization and that continues to take place. We've been pioneering as an aggregator of payment and FX flows into frontier and developing markets around the world, but particularly in Africa, obviously having an important impact, and we're thrilled to be recognized for that. And it's really a direct result of doing business digitally, effectively, safely, and working with clients to help them achieve better outcomes. So thank you for the recognition on behalf of all of our staff, and we look forward to continuing our rapid progress.
For the Asia Pacific region, the winner is DBS. DBS goes from strength to strength, building on its digital strategy and baking in sustainability initiatives. In the past year, it launched 66 new APIs for cash and trade services, including a suite of new FX APIs for Singapore, Hong Kong, and China. It helped its customers to integrate instant payments directly into their business processes. It made cross-border ACH payments available through DBS Ideal, and it rolled out the QR payment collection solution DBS Max for merchants. For the Central and Eastern European region, the winner is VTB Bank. VTB Bank has significantly strengthened its offerings to corporates over the past 12 months in cash management, payments, and trade finance. It has enhanced its host-to-host connectivity to provide for the direct exchange of documents between the bank and any ERP system, including single sign-on and settlement in rubles and other currencies. The bank has focused its innovation efforts on the Moscow public transport system, rolling out contactless payments and virtual travel tickets, and trialing biometric payments. The Latin American region winner is BBVA. BBVA's digital transformation is paying off for its corporate clients. It has launched new functionalities in its global e-banking solution, such as real-time global position for BBVA accounts, payment traceability, and mobile app. It's also leveraging APIs. For example, BBVA Mexico launched APIs to offer online 24/7 services for payments, account inquiries, and cash withdrawals without card, as well as an API market. Overall, the bank is supporting green initiatives across the continent, acting as a pioneer in offering sustainable transactional products. For the Middle East region, the winner is Samba Financial Group. Samba Financial Group is another regional player that has ramped up its transaction banking offering over the past 12 months. It has rolled out multi-currency collections and virtual accounts, as well as cashless travel payments in Saudi Arabia and UAE. In trade finance, it launched a new innovative Sharia-compliant Islamic trade solution called Without Recourse Sharia-compliant Discounting under Export Letters of Credit. For the Western Europe region, the winner is HSBC. In late 2019, HSBC launched its API developer portal, followed by Treasury APIs now live in 13 markets in Europe. These APIs are technology agnostic, easily integrated into TMS and ERPs, and facilitate efficient cash flow management, as well as improving payment tracking and reconciliation. HSBC has launched its cash flow forecasting module using artificial intelligence to leverage data from its liquidity management portal.
I am Nuno Matos. I am the CEO of HSBC in Europe. I'm really proud to win the Bankers Award for Best Transaction Bank in Western Europe this year. Our clients want digital tools that are fast, simple and secure. They want real-time visibility and control over their cash flow. And they want access to their data on demand. Our innovation in areas such as APIs and blockchain meets these needs by enabling clients to transform themselves so they can better serve their customers and manage their supply chains. We will continue to develop our proposition to serve European clients, connecting them internationally, and to serve clients from outside Europe who do business in the region. Thank you to the banker for this recognition. I am very delighted to accept this award on behalf of my talented colleagues across HSBC, and thank you to our customers for making this achievement possible.
And the moment you've all been waiting for, the overall global winner, who also picked up the award for North America, the winner is Citi. Citi has really stood out this year as a global leader, cementing its position well ahead of the pack in North America. In the US, it launched an identity and account verification solution, Citi Verify, to respond to cybersecurity and fraud concerns in digital payments. It also rolled out Citi Direct BE Cash Concentration, giving clients ability to manage their cash concentration needs online, very timely, under COVID-19 conditions. The bank revamped its Citibank Online investments for money market funds, partnering with fintech Cash Matrix to redesign the user experience. A big congratulations to you, Mark, and the whole Citi TTS team for scooping the overall global award as well as North America. As we're coming to the end of the webinar, I just have a few more questions for my esteemed panel. So my first question is, do you think that the regional players who are building out their transaction banking capabilities will really be able to challenge the global players? Why or why not? Eric, I was going to address this to you first.
I don't want to put out a blanket statement, say which side is winning, but I do think that the pandemic created a very unique opportunity for banks to rethink their strategy around the transaction banking business. And there's a lot of regional and markets difference as well. So I don't want to venture out too far, even when you're just looking at Europe. when we're looking at the regional banks in the Scandi market, they provided most of their support, majority of the support to their customer in the market, where the global players is actually being fairly muted in the Scandi market. Then you go to France, Italy, Germany, where we still see the regional players, domestic players provide slightly more support than the global players. Then you go to Netherlands, Switzerland, Ireland, we actually see global players are us, supportive as their regional players. Lastly, when we come to the markets we are in, the UK market, we see the domestic players actually providing more support to their clients during the pandemic, which means that we do see a very dynamic picture nowadays. I don't want to generalize, say which side is winning, but I think that pandemic does provide a very good opportunity for every single bank to rethink their strategy, whether they want to take up the challenge with all the global players, or they just gonna quiet down in the after the pandemic, where the world will be different.
And Mark, from your perspective as a global player, do you think that the regional banks are starting to become more competitive on that level?
Thank you, Joy. Look, let me express my thanks and gratitude for the awards. I think I know we're incredibly proud, but at the same time, very much pertinent to the question that you're asking. All transaction services business, certainly Citi, you can't be complacent. And I think, as we've talked about over the course of this great conversation, this great dialogue, is around the innovation, how quickly it moves, how you can ensure the best practice is out there with your client base. So certainly when I think about across our entire network, I think markets move at different paces. If we just use a simple analogy of the local adoption by regulators of instant payments, for instance, they're quite staggered and sort of stretch out broadly over the next couple of years in the market that we operate in, at least. So there is an element of best practice, how you can do that, how you can act as a global bank and recommend some of those best practice even to some of the regulators as they think about rolling it out. So, but for me, certainly I'd like to think that we have an advantage being a global player, consistency, experience, but at the same time, very much as part of that model is making sure that you have the local knowledge, you have that local market knowledge. That's where maybe some regional players, some local players maybe have an advantage to a degree, but as a global bank, making sure that you are very attuned with the marketplace, you are very aware with what's going on in terms of regulations, you are very aware of the industry themes and actions that are taking place, so you can leverage that to the advantage of the global companies that we ultimately service as well. So competition is clearly good, and certainly from our perspective, we very much work, I would say, in tandem with many of those regional players. But for us, delivering that country focus and that regional focus to the client, we feel as though enables us to keep us at our best and ensure that we're never complacent in sort of pushing the boundaries and delivering more.
And Francesco, again, do you see that there's more competition from the regional players? And then I also wanted to sort of take it to the next step, which is really about, do you think that there is a need to really rethink the global transaction banking model?
First of all, if we look at the submissions that we had in this round of awards, in my view, one of the messages, one of the facts that working hypothesis, depending on how you want to look at it, that was starting coming up, that has been more evident over the years, is somehow a polarization between organizations that are carrying forward and implementing leading edge innovation and organizations instead that are implementing tried and tested solutions that others might have gone through the implementation cycle a couple of years ahead, but that are still adding significant value to client. So in here, if we have to look at the ability to innovate, there is no doubt that the scale and reach and the technology and investment capabilities of the very large, big global players are providing them an advantage in terms of being able to innovate. On the regional side, instead, all depends on how we look at them, because right now, and in particular, whenever you have a liquidity, you've got a shift to low interest type of environment and so on, higher increased risk. The closeness to the market, the ability to interact and to talk with customers much more closer, to be part of the fabric in which those customers are operating, is providing a significant competitive advantage. Ultimately, if we have to take a very practical example, we are in a situation where the overall industry has the merchant acquiring dilemma. If I'm a merchant acquirer, all of a sudden, even merchants that had no merchant credit risk up to now have an exposure profile. And so how do I manage that? I had to become very close to them, because having visibility out of the credit scoring, out of the corporate information is not good enough, because their liquidity position are varying dynamically on a day-by-day, week-by-week basis. And the only way you can gain that type of insight is by having a very good relationship manager that is very close to the operations of the environment. And then you have a very fine decision to take in covering up for your risk or ending up absorbing too much liquidity and potentially being the cause for a company to topple over. So closeness to the market is absolutely important, and this is where the regional players have an advantage. In picking up a theme that has been mentioned by one of my esteemed panelist colleague here, is the ability to understand the business of your customer. So in order to improve the customer experience within the insurance business, you need to understand the business. The same goes for helping an organization selling a specific type of consumer goods online and so on. So what I would expect to see in the future is the rise of specialization as a value to customers and as a value to corporate. And as we are in an environment where interest-based revenues disappear and we will have to rely much more on fee-based revenue, the ability to provide those type of services, to contextualize them, and to make sure that they are delivering value for the customer, ultimately is not just providing a line of revenue, but also helping a transaction bank to de-risk the business by helping its customer to be successful in a market that is very, very different compared to what we had before.
That's very interesting. Ronan, I don't know if you want to come in on this. And I'm wondering, so there's the whole idea of maybe rethinking transaction banking, but also, what do you think transaction banking is going to look like in future?
Do we think there is a need for a rethink of the transaction banking business model? Absolutely. To some extent, we're partway through that journey, and a lot of the innovation that we've talked about today is testament to that. But in the backdrop of the macroeconomic environment, the pace of disruption that we're seeing in the market, a few themes come out. Firstly, there's a big question on the commercial model for transaction banking. In a low interest rate environment, how do you identify sufficient fee income to restore the growth prospects of the business? And particularly as there is increased competition and we've seen fee margin compression, what are the new products and services, whether it's charging for APIs, charging for channels, charging for banking as a service like business models that can change the commercial model and move away from a traditional model that was based on cross subsidies between products into one that is much more viable in the long term. I'd say the second question is around how to adapt to innovation at scale. Innovation being a constant, not simply a periodic pressure. We've talked about customer-led innovation, the rapid pace of new market infrastructure coming out in terms of instant payments and digital currencies and so on. How banks adapt to that and make that part of their ongoing business will be critical. And then finally, in terms of the transaction banking business model, We see a huge opportunity to break down some of the barriers between the wholesale and retail businesses. And we're already seeing some of that come through in terms of new opportunities to collaborate between corporate businesses, merchant acquiring, and even retail businesses to create new innovative propositions, but also to try and increase the valuation multiple of the business by exposing more of that value to the external market. And we're seeing some of the leading players starting to do that already.
Eric, what is the future of transaction banking?
I think the future is infinite. Everybody knows that we won't know what's going to happen. But from my perspective, I think the market is still way too fragmented. It has way too many different standards. Even if you think about SWIFT as one of the biggest standard body in the industry, it does not capture 100% of what's going on in the industry. So what I think in the longer run, the industry will emerge as a dual system sort of model, which means that there will be a traditional banking system plus another emerging sort of blockchain, any sort of blockchain related system. And within the traditional banking system, you're probably going to have a Chinese system versus the rest of the world system. This is where I think that the industry will evolve in the long run, because the current very fragmented, very sort of different standard-driven sort of market is going to prove very inefficient for the long run of very big industry.
Excellent. And Mark, I'm going to give you the last word.
I think to summarize all of the panelists, the future is very exciting. That change is continuing, as I think I quoted earlier, one of the CEOs of a big technology firm saying that digital adoption, in 2 months, you had sort of 2 years worth of digital adoption. My hope is that momentum continues. And again, we've got an exciting future ahead of us for the transaction services business, further innovation, servicing those clients, ensuring that their clients are more satisfied with them. That's going to continue to be the differentiator there. So an exciting future ahead, and I'm delighted to be part of it.
Well, I'd just like to say thank you so much to my panelists, Mark, Ronan, Eric, and Francesco, for participating and for all your interesting insights. And a big congratulations to all the winners of the Bankers Transaction Banking Awards 2020. Thank you so much for listening.